Hello and welcome. You're watching Tokenomics and I'm Anisha Gupta. Well, there seems to be no end to the volatility in the cryptocurrency market. The crypto market valuation has declined by 5% to $2.7 trillion in the last 24 hours. The Bitcoin prices fell below $80,000 mark on Monday and hit its lowest level since the month of November, before pairing some losses, of course, in the day-to-day. Other cryptocurrencies, including Ether, Ripple and Solana, also witnessed a sell-off. For the first time since the collapse of crypto exchange FTX collapse, the market has entered extreme fear territory, with the Crypto Fear and Greed Index registering a reading of 17 as of 10th of March. The crypto market sentiment has weakened despite the pro-crypto President Donald Trump's efforts to give the industry what it wants. Last week, Trump signed an executive order for the creation of a strategic Bitcoin reserve, fulfilling a promise he made during his election campaign. The White House also hosted its first crypto summit over the weekend. Speaking at the summit, Trump reiterated that he wants to make America the crypto capital of the planet. He also announced the plan for a stablecoin law before the month of August.
And last year, I promised to make America the Bitcoin superpower of the world and the crypto capital of the planet. And we're taking historic action to deliver on that promise, as you know, around the table. I also want to express my strong support for the efforts of lawmakers in Congress as they work on bills to provide regulatory certainty for dollar-backed stablecoins and the digital assets market. They're working very hard on that.
Well, but here's what seems to be triggering the crypto sell-off. Firstly, investors are disappointed because the creation of the reserve means that the government will not buy any new cryptocurrency. Secondly, investors are focusing on macroeconomic pressure. Over the weekend, Trump did not rule out the possibility of a recession in the US, and that accelerated the downward move on Monday. Not just that, Trump's unpredictable trade policies also have spooked the investors, and the markets really seem to be believing that the correlation between cryptos and equities really seems to be growing. To understand the impact of Trump's policies on crypto, I am now joined by Sumit Gupta. He's co-founder and CEO at CoinDCX. Ashish Singhal is co-founder CoinSwitch, and Dilip Shenoy is chairman Bharat 3 Web Association. Gentlemen, hi, thank you so much for joining in. And first of all, on the correlation that we really seem to be getting closer and closer on, Sumit, what is your sense? The way we're looking at sell-off in currencies and commodities and equities, and so is cryptos following as well.
Yeah, Manisha, first of all, thanks for having me here. And I think the correlation between equities and crypto is more apparent, and it seems to be converging. And I think the reasons why crypto prices have fell down is pretty much what you have covered at the start. It's basically the fears of recession and the uncertain policies from the Trump administration. I think all of that has triggered the sell-off, not just in crypto, but also in equity markets. I was looking at some of these stocks, even Tesla fell down by 15%. So I think it's largely because of these macroeconomic policies. But yeah, I do see that correlation getting increasing. And I think eventually the markets will converge, where equities and cryptos will essentially, mimic a similar pattern in the long run.
Ashish, this one is to you, and just keeping on with the prices itself. And while this year started on a very positive note, but we are in March and the first quarter itself, and the prices have come off by 10 to even 50% for some of these cryptocurrencies. How is the segment taking it right now?
I think being part of this industry for long, this volatility is expected in the market. If you look at broadly, right, what you covered as well, that this is not just what we are seeing in the crypto market, but be it in stocks, Indian stocks, or even S&P, Nasdaq, across all the segments, all risky asset classes, the money is being pulled off and pulled into more safer asset classes like bonds, golds. So that is where you're seeing a sell-off, high volatility across markets, including crypto. From a user segment, I think a lot of users understand this market already. A lot of users who have been investing in it for a while understand that these macroeconomics changes do impact market and create that volatility. Our advice to the users is simple: that in the case of extreme fear, trade with precautions. Take as less leverage as possible. Make sure that what you are investing, the thesis behind it. You are investing for the long run, and it's not just to make short-term gains. even if you have a position with the short-term gains, try to see whether it makes sense in this market and remove excess leverage from your position. So I think users are taking that into account, and we haven't seen a large change in the user behavior as such. Users have gone through this time and time again, especially in the crypto market, and have kind of been resilient in this market.
Oh, well, absolutely. But wasn't this year expected to be different with Trump coming in and a lot of support expected when it came to cryptocurrencies as a segment? Dilip, this one is to you. And I want to start with the strategic reserve part of this. Initially, the street was very excited about it until they knew or heard that the government is not going to be buying any more cryptos from the market, but whatever they had was being shifted as a strategic reserve.
I think, Manisha, again, thank you for having me here. And you mentioned it initially that the expectation of the market was that they will invest to buy more crypto, reserves and put that into the strategic reserve. But I think the market also was spooked by state government, national government actually selling, the stolen crypto, which put a huge lot of supply into the market. So if you look at the volatility and the decline in the value of virtual digital assets, it started from there. So there's also, a full kind of expectation from the people who were looking at additional Bitcoin, and especially if you notice that when he talked about the different tokens that would make up the strategic reserve, the token actually shot up briefly, and then of course when the strategic bill was kind of announced, they all declined. So it's kind of, like, for example, if you look at the budget in India and you look at the stock market, sometimes the stock market anticipates what's in the budget and doesn't really fluctuate much, right? And I think here there was a greater expectation of the people who were investing in this asset class, and therefore the volatility actually was seen there. Also, like Sumit and both Ashish mentioned, there seems to be a kind of a re-evaluation of investing in different asset classes. And there seems to be, actually a move to silver, not even gold. It's very surprising. The silver prices are rising much faster than the gold prices. So I think the traditional belief of an investor is, and the old thing is, invest in gold, silver, and see what happens in the future. Of course, the Trump's morning tariff, afternoon relaxation, evening new tariff, and then the whole thing is a challenge for not only countries to deal with, but also investors.
Oh, well, absolutely. Sumit, the other thing to watch out for in this week was the White House summit. And again, markets put in a lot of expectations onto that. And while we did hear something, but not to the effect that the street was waiting for, there were no big, bold statements. There was conversation, of course, about stablecoin regulations by the month of August, but that was also split around. How did you read into that?
Yeah, Manisha, I think to that point, if we zoom out and look at it from a long-term perspective, I think policies continue to remain pro-crypto. The stablecoin legislation that we are expecting, I think that's still very well on the cards. Obviously, it was not announced, and people were expecting that it will be announced during the crypto summit in DC. But I think that's just market predicting it, and the markets, of course, will react to those kind of events. But I think all of that is very well on the cards, and I still feel that. To your question, I think the overall year of 2025 still looks very promising and bullish to me, right? Obviously, these short-term sell-offs, all of that happens. That happens in pretty much any asset class. But I think stablecoin legislation is a big thing that will come out. Obviously, the market had expectation that during the crypto summit, the government will announce additional Bitcoins buying as well. But from what I'm reading from different states, I think that is still not ruled out. It may happen possibly that there may be additional buying that governments may do. What has been communicated that there will not be sell-off of the seized crypto assets, which is roughly around 200,000 Bitcoins, with the US government. So all of those are things the market expected a lot more, which didn't reacted to it. But overall, I do still feel that there is all of these developments are something that are very positive, bullish, and they are very well on the cards.
Ashish, would you say the same, that there was way more hype and lesser action, and the markets put in a lot of hope to all of these things? But as Sumit says, 2025 overall still seems like a very positive year. Would you agree to that?
No, absolutely. And I think the hope also comes from the bear market that the crypto industry is coming from.
Sure.
For the last 2 to 3 years, there hasn't been any significant movement, right? ETF was the first movement that happened 1.5, 2 years ago. And after that, this is the pro-crypto government that has happened. So there was a lot of hopes that, there was not enough movement in the last 3 years. Would that start happening from the day Trump takes office, right? Obviously, policy takes time. And over time, it'll build up to that probably that hype. It'll live up to that hype that has already been built up, right? So there was a lot of expectations of the market, and that is why you're seeing a lot of sharp movements. It goes up 10%, it goes down 10% within a day. Because there is a lot of expectations of the user on these key meetings. But like Sumit also said, that these will take time. Policies are not made in a day and need to be sustainable. Buying Bitcoin when it is already a volatile asset, equating it to gold, maybe it's not the right time yet. But maybe over time, these policies will build up better with a lot of thought in mind on how to proceed with that. We have already seen positive regulations in terms of SEC actions have come down. More banking supports have happening in the US for the crypto industry. There are a lot of positive movements which are happening slowly and steadily, but we can't expect a switch to flip and the entire sector become euphoric. And I think today a lot of hype is being generated, but over time you will probably see a lot more positive regulations coming into place.
Okay, let's steer towards Indian markets then. Of course, it is about global phenomena that we've talked about, but Dilip, this one is to you, and I want to talk about not a new entrant, but an entrant which started to withdraw in 2022, coming back in yet again, and that's about Coinbase, where they are planning to come back into India, have started to put in and tune in into the regulations here, will start their retail services into this year, as well as the statement coming in from them. Do you think with the whole positivity coming back into this markets and India always seeming like a promising market, we will be looking at more players entering?
Absolutely, Manisha. Just to share with you, even while they were not active in India, Coinbase was a very prominent member of BWA. Okay, so they stuck by us. In fact, Paul Grewal, this chief legal officer, was here. We had a closed door meeting with him, etc. So Coinbase is a big supporter. In fact, very few people know that Base has what is equivalent to a global competition center in Bangalore. So they're really committed to the Indian market, and they are looking at it here. You will also see Bybit also has got registration. You are seeing others also get registration. Earlier, Binance had got registration, but they're still looking at their India plans. I think all of the exchanges that were looking at India and were out of the market, you'll see more of them come in. If you look at the chain analysis report and you look at other reports, India is among the largest adopters of this asset class. So it's a very positive move here. And I think if everybody is covered under the same regulation in India and follow the same rules, then it's good for the domestic exchanges like CoinDCX and CoinSwitch also, because then everyone has got a level playing field. And I think the Indian investors will look at the Indian exchanges also very positively.
Oh, well, absolutely. More the merrier. And if people are making their beeline for India, that does mean positive cues coming in here as well. But gentlemen, it's time for a very short break. Don't go anywhere, because this discussion on cryptocurrencies will continue on the other side.